I thought early on that I would have to go out and buy one of those mom and pops, move my mom here or find somebody to operate it or operate it myself and, run that facility on my own. But really, once I saw the numbers and realized, especially with technology, how really easy it was to manage through automation, I was in.
This podcast is for informational purposes only and does not constitute financial, legal, or investment advice. Please consult a professional advisor before making decisions based on what you hear on this show.
All right, everyone. Welcome back to the Roundtable Podcast. Today, we've got another exciting episode with two amazing panelists. My partner, Mr. Joey Murray and Jamie O'Brien. We're diving into the deep world of self-storage as a passive income opportunity. You've heard of it, but maybe you have or have not considered it and how it fits inside your investment strategy. So let's break it down, gentlemen. So to kick things off, why do you think most investors overlook self-storage as a passive income opportunity, Jamie?
I think I could talk about my personal experience, and I think this resonates probably with some people. It's just due to the fact that people don't think about it, right? Self-storage is only used by about 10% of the American population. I've never personally used it, and I never really looked at it as something that I thought about investing in because I didn't understand the numbers behind it. I did not understand the supply and demand metrics. I didn't understand how many people actually do use it and how valuable of an investment it actually can be. And so I think that's probably a piece of it, but that's personally why I never really thought about it for a long time is it just wasn't on my radar as something that I personally used.
Yeah. Well, and I think that you said this and that what 90% of the people out there have never used self-storage, but yet 30% of people who are renting are currently using it. And I think as we think about recording this podcast in April of 2025, where we're seeing the market shed 10, 15, 20%. And there's a lot of like, ooh, wait a second. Are we in a recession? Are we going to a recession? What's going to happen? And there may be jobs lost, right? And when jobs are lost, what ends up happening? People ends up losing home. They end up moving into apartments or rental properties. And if you are having to downsize in some shape or form, where are you going to put all of that furniture? I mean, sure, you put it on Craigslist, Facebook Marketplace. But if you're like optimistic, thinking, I need to hold on to it. I don't want to get rid of, grandma's, like dresser that was passed down from years and years, then you put it in a storage facility. So I think that's the people, as you think about who's going to be using this tool, might this be a good strategy in this environment? Maybe worth talking about.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out how does this all connect into my own personal system.
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS.
Joey, what about you? What keeps people from considering self-storage, though, as an investment option?
Be honest, Russ, I think it's just not realizing that they could be a part of deals like that. Like, I think when people have considered real estate as an investment asset class, they can see themselves investing in like a single family home. It's kind of a known quantity. It's a smaller bite-sized kind of thing to take on. But when you drive by this massive, metal box that's, it seems like a big business project that one person really can't handle themselves. And so they've never really considered it. They just think that's for somebody else. And but the reality is that there's a lot of options that include syndications, for instance, that people can get involved in these sort of things. And I think they just need more exposure. They need to know the proper operators in the space to know that they can get involved in them.
Love that. Jamie, for you, you've invested in tons of different real estate deals, like in the residential real estate space. What was maybe an aha moment for you when you realized self-storage could be a serious passive income opportunity or strategy?
Yeah. So, to your point, I've mainly started investing in single family homes, fix and flip, also buy and hold. I saw kind of the big REITs, the big institutional buyers moving into the single family home space super aggressively. And this was probably 2019-ish. And I was like, okay, what else are they doing? And kind of started down the rabbit hole of where these big institutions were putting their money. And I saw them moving heavily into self-storage. And that really opened kind of the floodgates to start digging deeper into this strategy. I said, okay, if these big institutions are jumping into self-storage, they don't jump into things that don't have like some serious good returns attached to them. And so that was kind of the eye-opening thing. And once I started digging into that, I followed it over the last few years. And kind of a fun statistic that I looked up was around that time in 2019, the combined capitalization, the money that they were putting into self-storage was around $63 billion. And the latest stat I could get by 2023 was they're up to 101, almost $102 billion in this sector alone. And so I just follow the money. If the big players are doing it, it probably makes a little bit of sense to dig deeper into it.
Well, and it's a scalable idea, right? Like when I thought about this is the first passive income strategy I had. I was in college. You've probably heard this story. I thought, you know what? There's an office. There's like usually there's like a little room or apartment or something. I think it is. Maybe it's like the office for the office or whatever. Above this, I need to figure out a way to make money after college. I want to be the good son since my mom was single mom. Like, how could I help her? You know what? I could put her up in that little room above the office at the self-storage place. So I can provide for her. I can give her a job, right? Like she can be helpful and she could just manage the asset that I own. Right? I thought that this is going to be amazing. And unfortunately that never, fleshed itself out, but I do understand why people think about it. It's like, there are a lot of those mom and pop, or son and mom run places out there. And now these big groups are coming in and they're like, hey, we could just roll all these up and start scaling. And you're starting to see that. And now you're seeing those big name brands. And I think while it's probably more, on the top of our mind, because we see those brands now everywhere, where before they were probably a little more low key. All right, Joey, kind of coming to you here. Why does self-storage matter, especially in this environment where we are today? Why do you think it's a big thing that we need to consider?
I think the big attraction to self-storage is that it's, for the most part, recession resistant. And it doesn't mean it's completely out of the realm, but even like 2008, for instance, self-storage was one of the least affected asset classes. And I think it's for a reason that you mentioned before, is that in a booming economy, what happens? People are moving like crazy, and there's a need for temporary, placement of your things, or moving from one house to the other, and there's timing issues and so on. But in a down environment, people still need, to your point, there's the places when people need to get out of a house and they need to downsize. Well, they have to have places for their stuff. And on the whole, there's actually been a lack of inventory nationwide. In fact, I think the statistic is something like 96% of self-storage, that's the occupancy on a national level. And so what that tells you is there's still room for more, there's more demand than there probably is actual supply in most areas. So I think that's the big draw to it, is in times like this, people just want safety. They want security. They want to make sure that they're not going to get in on the next deal that's going to go boom or bust. They just want something that's kind of more steady Eddie, like a self-storage project.
Well, when you're considering what's in your investor buy box, right, you're trying to think about what fits who you are and where you are in the timing of things. So you make good objective decisions instead of subjective decisions. So you consider the timing. You talked about high demand, right? 96% occupancy. And what we know about a lot of these municipalities, there are certain things they're not allowing for new things to be built. Mobile home parks are one of them, right? Very few of those are able to get, brand new parks coming on. Self-storage is probably right underneath that. There are not a lot of those new constructions out there. So because there's still this higher demand, there's people that maybe have second homes. I think about my father-in-law when they sold their lake house, and there's going to be people right now that are fleeing beaches, fleeing the lakes, whatever, because, hey, if I got to tighten up the ship here a little bit because income is coming down. Well, my father-in-law, he had all this furniture. The people who bought the house from him didn't want the furniture, They didn't want it at the same price he wanted them to pay him for it. So he decided to put it as a self-storage building, and it stayed there for 3 years. So there are, reasons why today, I think, just as you talked about supply difficulties, maybe downsizing, moving over, that this is a category. If you can find opportunities to get in with good operators, that could be huge. All right, Jamie, tell me a little bit about misconceptions that maybe you had to unlearn about the self-storage space before seeing its true value.
Yeah, I mentioned it a little bit earlier. The biggest one, I think, for me was just not understanding the demand, how much demand there actually was, and how many people actually use the self-storage facilities. The next one was how accessible it was to get involved, like how easy it was actually to be an investor in these type of investments. I thought early on that I would have to go out and buy one of those mom and pops and, move my mom here or find somebody to operate it or operate it myself and, run that facility on my own. But really, once I saw the numbers and realized, especially with technology, how really easy it was to manage through automation, I was it. I mean, it just makes so much sense from that perspective, from the ease of use, and just knowing that there's great operators out there who are looking for investors to invest into these things, that I didn't have to go and do all the heavy lifting myself, right? And so I think there's a lot of untapped potential in the space. It was almost like too big of an idea. Like I thought I was going to have to do it all myself. And so I didn't really ever dig deep into it for many years. But once I did, I could see the huge opportunity in it.
Guys, don't sleep on the mom above the office bill. My mom was telling me the other day, she goes, Russ, I got a text message from you guys the other day talking about passive income opportunities. What do you think maybe I can get involved in? I'm just like, maybe I'm going to hit this back up if I find a good location. Right? Like she called me today. She was telling me like her air conditioning, maybe needs to be replaced. She's wondering, should she go through all that? Look, I'll take care of the air conditioning. I'll take care of all maintenance and repairs. Like you just man that front shop and sell some cardboard boxes. Let's do this thing. Like this is going to be fun. I think Stallion, I know I've been holding you back from like going and doing deals. You find me a good self-storage space with a nice room above it. Like let's not put mom in something too small here.
Real nice.
Something real nice, like a window unit connected.
Would she rent out the hand trucks to people too and all that?
Dude, I'll teach her. She's trainable. Like, come on. All right. Stay with you. What's the number one reason people hesitate to invest in self-storage? And what's the truth behind it, you think?
I think it really comes down to these sort of deals, at least from my experience. I'm going to give a caveat. I'm not an expert in the space by any means, but from the times that I've seen these deals presented, they're very short-term in nature, like where they're typically buying something, they're going to build, and then they're going to flip it very quickly once they get it leased up. Or they're going to buy an existing operation that's very undervalued because they haven't been run well. The rents haven't been increased over time, or they need repairs, or whatever the case may be. They're going to need capital to get that going up to par. And then they're going to lease it up to full capacity, and then they're going to sell it. Both of these type of opportunities, or the ones that I've seen, don't produce a lot of monthly cash flow to the investors, the limited partners involved in the deal, until sometimes 18, 24 plus months into the transaction. And then it's short-lived because then they flip it to another buyer, 3 to 4 years in. So I would tell you that I think people that are looking for predictable monthly cash flow, they don't really see them in these sort of deals very often. And again, maybe I'm missing them, but that seems to be the kind of the flavor of this asset class. Y'all can agree or disagree, but that's been my take.
No, I think you're right. I mean, the reason why people are not getting typical cash flows, like monthly distributions off their self-storage investments, unless they're running it, right? Like they're owning and manage it. Because most of them, like you said, are either doing ground up or value add. And there's a delay in cash flow. Now, the opposite is, I think what you were saying, Jamie, is that the big institutional buyers are getting into this space and they're buying all of those up. Like, so when these guys are selling, somebody's on the other end buying that cash flow.
Holding it for cash flow.
Yeah. And that's what they're doing, right? So I think there's a little bit to be said for what are you trying to accomplish? How does this fit into your overall objective, right? For some people who already have lots of monthly, quarterly cash flow and don't need cash flow, but will like a little bit of chunky money. I think that that's a good opportunity for Stallion, who is completely snobby. His investor buy box is tight. It says monthly cash flow or kick rocks. Like he's out. And I mean, but that's the beauty. Like that's what I love about what you said, Joey. And what I want to encourage every person listening to this is that when they're building their investor buy box, they get so tight on their criteria and they're not willing to bend. And I'll beat you up and I'm going to challenge you on it all the time. But I love that you stick to your guns on that, because that just tells me your buy box is tight. And whether you'll miss out on some really good opportunities that I think are good opportunities that probably end up losing me a bunches of money, that's on me, right? The one time I win, I'm going to let you know and I'm going to rub your nose in it. But I love that you do that. So listen to what Joey says here. Follow that process. Find what your buy box is and stick to it. If that's yours, like his, with cash flow, make that the sticker point.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz. Hey, Wealth Without Wall Street family. If you're serious about building passive income through real estate, then you need to check out Dustin Heiner's podcast, Master Passive Income.
Yeah, Dustin retired himself at 37 years old using rental properties. And now he's teaching you how to do the very same thing step by step. If you're looking for real estate strategies that actually work, this is the podcast for you.
So go subscribe to Master Passive Income wherever you listen to podcasts and start building your path to financial freedom today. Go check it out now.
All right. I sort of asked you this question before, Jamie, but I think there's probably a little more detail you can add to it about kind of how you believe self-storage stands out versus just other real estate investments.
I think it stands out from a simplicity standpoint, right? The more I dug into it, the more technology advanced. I mean, you're literally managing a metal building that's cut up into little squares with doors on it, right? Technology these days, there's one right down the road that they built not too long ago. My buddy has a unit there. He literally has a little QR code on his phone. He scans it at the front gate. It opens the door. He goes in. I don't even know if they have anybody in the office. If it is, it's one person that's in there to manage new clients or manage.
The mom's asleep up top.
Yeah, probably.
Yeah.
Probably just taking a nap, watching her sitcoms or, whatever she's doing up there. Being a single family, mainly single family, some small multifamily, there's no toilets to fix. You're not really managing a ton of people. I think every self-storage facility I've looked at recently, you can just go ahead and buy your unit or rent your unit online. Like that's that easy. And then people use it. You mentioned earlier, we're in a market that we don't know what's going to happen, potentially a recession coming. People are downsizing or transitioning. I think we're seeing an older population that's probably downsizing and or unfortunately passing away. You mentioned grandma's stuff at some point in time. And so I think demand is going to continue to be very, very stable. And the operational overhead is very, very low. And those two things go very, very well together.
Jamie, you're meeting with people every single day who are setting up their passive income operating system. And once they have that, they become an investor, right? A lot of times people are they go through our passive income lab to know what those are. So if you're one of those people, you've set up the infinite banking system, you get your passive income operating system installed, but you're like, I don't even know what this investor buy box is, or I don't know what my investor DNA is. Should I invest in these type of things? Go to wealthwithoutwallstreet.com/free call. And one of our coaches can walk you through what we have is called a passive income lab. It's a 12-week interactive process that you will actually become the best investor you can be over 12 weeks. We compress the, decades of time that we've all spent figuring out all the things not to do, right? We've put that into 12 weeks and you go through it with a small group, both in a one-on-one setting. So that way you have somebody that you can have accountability with, but also you do a group setting so you can see what other people are doing and you can, be encouraged by that process. Go to wealthwithoutwallstreet.com/free call. So Jamie, when you think about the steps of how this fits in with someone's passive income operating system, where do you feel this fits, and help them connect the dots. Maybe they've just got that set up and they're trying to see, how would I use this tool?
Yeah. So, I mean, I think where this fits in a passive income strategy, Joey mentioned this a little bit earlier, is understanding the offering. And so if you're wanting to be super passive, most of the deals I've seen in the self-storage space are going to be more of an equity and potentially a tax play. So I think understanding your buy box, understand what you're looking for as an investor. If it's immediate cash flow, that may not be the best move for you. If it's long-term equity gain and some potential tax benefits, it could be a great fit. Or we have people who also want to build a business to turn it passive, right? There's a great opportunity for that. And I think self-storage still offers an amazing cash flow opportunity. It just may be a little bit more activity up front if you're coming in, hiring an operator and trying to maybe buy one of these yourselves to hold for a cash flowing asset, and or buy into a cash flowing asset as well. I think the key thing really is understanding those two things. Are you after immediate monthly cash flow, or are we looking for maybe some long-term equity gains and some tax benefits attached to it, right? And so that all starts, as you mentioned, with really the investor DNA, understanding who you are with investor and building out that buy box of what we want to invest in today.
All right, Joey, put a little more close on that. How do you believe infinite banking interacts with self-storage in particular? But you could also throw in any other cash flowing strategies, because we have people that are new to the podcast that never even heard of infinite banking anyway.
Well, so infinite banking, if you're not familiar with it, first of all, you have an opportunity and you should go and research it, because it's the number one tool that people use to become financially free. It's where Russ and I have shared over the years that we started putting our capital into this we call the passive income operating system that gives us access and control of our cash to then leverage into these types of assets. All these different asset classes we're talking about can be used with IBC, and it's the foundation of all this. So how does this work with self-storage? It works like peanut butter and jelly, and it also works in congruence with when people are worried about the market. They're worried about how sure the foundation is on their investment strategies, on their future cash flows, on whatever that case may be. This is infinite banking is where you park the cash before the storm, and self-storage is where people put that investment dollar that they don't want to lose, that they want to continue to grow over time. So I think infinite banking and self-storage go together amazingly well when you're most conservative about the future. And I think now is the time that people should be batten down the hatches before the storm hits. And so I think it's wise that we're talking about this particular asset class and infinite banking today.
If you've never gone through our passive income operating system process, you can go to what'swallstreet.com/PIOS, and it gives you the diagram. It helps you see the financial architecture of how the cash flow moves. Because once we have free cash flow and it goes into this infinite banking hub, then we get to make the decisions of where we're going to put it. Is it going to create a passive income? So are we going to be looking at assets like self-storage? And will the self-storage asset that I'm investing in, will it create passive income? If it does it create more income than if I use that same cash to pay off a debt that reduces a monthly expense? So if you've never seen that and you're a visual person like I am, go to what'swallstreet.com/PIOS. It's a fantastic free ebook tool that you can go through and see how does the money flow? How does it interact with the different investment opportunities out there? All right. So Jamie, as we kind of start to wrap this up, what would you say maybe is someone's first move if they're ready to start, potentially investing in something like self-storage?
Well, I think two things come to mind. I think every new opportunity starts with education. So I think you have to get educated about the space. And then there's the old saying that your net worth is your network. And so I think you have to start networking. So if you know that you want to be a passive investor in one of these deals, I think the first step is start researching the syndicators, researching the opportunities, find the operators in the space who are raising money and start building a relationship with those people, start asking the important questions, the due diligence, start learning more about the space in general. And vice versa, if you want to be more active, you want to go buy a mom and pop potentially, You definitely need a little bit more education on the front end, but that's networking too. You need to start networking with people in your network, people outside of your network, trying to find these operators, have conversations about their business, start making offers, and just try and get the foot in the door that way. So I think real simple first steps are education. I always go back to that. We need to be educated before we take a leap into anything new, and then network. Tell people what you want to do, and the opportunities will come to you.
Joey, we stress that investor DNA is important. It helps you understand why you're going to like things, why you won't like things. It'll help you make better decisions as a result. For me, or my profile, being very, excitable, wanting to be involved in the transaction. Probably the reason why, if I were to do it, I'd need to get my mom in the deal, right? Like I'd have something I could to participate in. But outside of that, I could see it personally as boring. Take the other side of that. Why is boring okay?
Well, all you need is a couple of exciting investment deals that went bad to realize boring is awesome when it comes to building passive income. Slow and steady wins the race, bro. Like that's why you have me as a business partner. I'm that S type, that steady steward, right? Loyal. This is the type of investment that I love, is something that's predictable, something that is recession resistant, something that is going to return over a long period of time. Now, again, I say that with the caveat of how I said most of the deals I've seen have been the opposite of that. They've been this, let's build it really quickly. Let's not do cash flow in the meantime. And then let's flip it for taking your dollar and making it $2. Take your dollar, making it $3, whatever. It's like a big hit. It's that chunky money type of strategy. Whereas if it were the case where I could buy one that was already being professionally managed and it was predictable cash flow on the back end, it would be a huge winner in my mind because it's boring, it's consistent, it's reliable, and it's not going to be lost in a recession. So those are my things. The last thing I'll add to this is it's run like a business. It's not market-based. Well, I don't think we've talked about that too much on today's show, and I just want to kind of point this out. You could have two self-storage facilities next door to each other with the same number of units in the same acreage, and they would be potentially valued at two different prices. And the reason is because one could be run terribly with low occupancy, low rents per month, bad management practices, and overhead issues. And the other one is a lean, mean, efficient machine that is hitting all of the right numbers. And that one will be dramatically more valuable on the market than the one that's mismanaged. So I love that because you can't control the market, but you can control how you run a business. And I think that's why, again, another kind of check mark by this as a great long-term play.
Yeah, I definitely love the business aspect of it. That would appeal to my profile. All right, final thoughts, Jamie.
Final thoughts. I mean, I think self-storage is going to continue to grow. I know it's projected to continue to grow. Self-storage is driven by demand of changing demographics. I mean, they talk about the 4 Ds of downsizing, decluttering, divorce, and death is what drives the demand for self-storage. And we think about what's just happened over the last 5 years. We've seen a massive increase in people working from home. I'm one of those people, right? Taking up extra space in my house. And so decluttering was a huge need for us. There's going to be a point in time where my kids want to get into this room, split the room they're in, and we'll have to figure it out at that point in time. But downsizing, again, I talked about this earlier. We're seeing an elderly population, right? Usually when kids leave the house, people are downsizing out of their homes. Maybe it was something smaller. They need a place to put that extra stuff. And so I think we're going to continue to see more and more demand in the self-storage space. And I don't think it's going anywhere. But I think the biggest thing is you need to make sure that it's a good investment for you, because I believe it is a good investment, but is it a good investment for you?
All right. If you stick around and you're listening at the end, I love to throw in some cookies here. This is where, 90% of the people that maybe they tuned out, they don't get this, but you just gave the 4 Ds and it made me think of a good country song. Yeah, I'm going through the big D and don't mean Dallas. You remember that song? The 2-bedroom mortgages due, side of my blues palace.
Mm-hmm.
Yeah, I love that, man. It's sounded good. All right, Stallion. Final thoughts here.
How are you going to set me up like that? Like that, I can't follow that. Man, I'll tell you this. Final thoughts around self-storage is this. I'm gonna echo what Jamie said. This is an amazing way to preserve capital. It's a way to protect in a down economy, especially recessions. It's an asset class that, when it's paired with infinite banking, key component there, can provide consistent conservative growth. And the caveat is you have to know your investor DNA to make sure that it's the right fit for you. And if you're going to be passive in it, you have to know the operator. Do not just blindly get into this asset type or any others where you don't know the operator. That is a formula for disaster. And it's kind of like just go throw your money out in the yard and see how much better it turns out.
I love that. Well, Tribe, this is another episode of us breaking down different passive income options and strategies, right? There's no good or bad investments. There's only good and bad investors. You've got to learn how to become a better investor. So regardless if you know someone doing this and having success, doesn't mean it will translate to you unless you have become a good investor. So we wanted to give you just insights. Now, what you do with them are up to you. Thank you for listening. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.